FXN Mentoring, what's up, guys? Welcome back to Trading with Market Makers, and welcome to week 2. So as we get into week 2 of the program, during week 1's session, we went ahead and we covered the Market Maker foundations, and then we covered Market Maker cycles and resets. Now, week 2, what we're going to end up doing is we're going to take a deeper dive into the market maker cycle, and we're also going to take a look at resets, failed resets, and just resets in general, and we're going to take a deeper dive into those as well, because you have to understand that the reason we're spending 2 weeks on this is because this is what gives you the advantage. You know, being able to trade type 1s, 2s, and 3s, that's great. That's the pattern that you're trading, right? We're going to get into those, in later videos. But the pattern is one thing. But knowing what pattern you're looking for, meaning in what direction are you looking for that pattern to develop? Because if you're just looking for patterns of type 1s, 2s, 3s, 4s, that's awesome. You know the pattern that you're looking for. But if you don't know what direction you're looking for them, you're going to end up finding yourself trading every pattern that you see. And of course, there's going to be patterns that you see that are not going to work out for you, especially if you are going against the actual directional buys. So understanding the market maker cycle is huge because it gives you the advantage, the edge that you need in order to be a consistent and successful trader over an extended period of time. Because remember, we're not doing this for a day, a week, a month. We're trying to do this for several years, right? And so in order to do that, you need consistency. Okay, so we're going to be spending a lot of time on this video during this week's homework and test. We're going to be really hammering in on these market maker cycles so we can get through them and you can have a fully understandable understanding of these market maker cycles and resets. All right, so let's literally jump right into it. The market maker cycle. So the main things we're going to talk about in more detail today in this week's video. We're going to talk about the ADR. Okay, what about the ADR? Well, we know that, the ideal range is 3 times, right? But what about the 2.5 to 4.5? We're going to take a little bit more detail into that, and we're going to take a look at different market maker cycles so we can help determine whether or not we can take a cycle from a 2.5 or a 4.5. What's the difference? So the components that make the best market maker cycle. What are the components that make the best market maker cycle? We're going to talk about that. When should you split a cycle? Right? This is something that I saw in the homework a lot. Some of you were splitting cycles like there was one every other day, right? So we need to talk about how to correctly split the cycles if we need to. Meaning if there's a big move that's 600 pips and you know that a regular cycle is 250, how do we split that up correctly, right? That's what we're going to talk about today. And then we're going to talk about also what is the big cycle versus multiple cycles. I saw in some of the homework examples, when I compared them to my own charts, some of you had a big cycle of like 4.5, while I had 2 cycles within that same one. Okay, so we're going to talk about the differences of really the splitting of the cycles. Whether it's, do I keep it, do you split it up into multiple cycles, or do you keep it as a big cycle? What gives you the advantage of keeping it big versus splitting it up? And a lot of that has to do with the ADR. So let's go ahead and let's jump right into the charts and let's break this down for you. All right, so let's take a look at the charts here, and let's take a look at this and break this down for us. So here we have a pound USD. This is actually part of, I believe, the test. And so we have a big move from here all the way down to here, right? Now, if we had our ADR, which I gave you, and I want to say it was at 90, if I'm not mistaken, right? So 90 is our estimated pips per day. If you times that times 3, it gives you about 270 or so. So 270 is 3 times our cycle, or ADR, right? And so when you measure this out here, it's 464 pips or so. So clearly we're way over 3 times ADR, right? So if you take 464 and let's say you divide that by 90, which is what the pips per day are, or pips per day is, you get about 5.1 times ADR. Clearly that's way too much to be one cycle. Okay, so that won't work. So we have to split this cycle into 2. So how do we do that? And by the way, whenever you guys are measuring the pips, make sure that you're measuring from the wick to wick. Okay, so from the wick to wick, not from the bar to bar, but actual from the very top of the wick to the very bottom of the wick. All right, so make sure that you're counting it like that. Okay, so if we have this one big section here, how do we break that up? If we know that we have to break it up because it's 5.1 times ADR, so we know this. All right, here's what I like to do, is I like to put on my EMA lines. And the reason I like to put my EMA lines on is because the EMAs will allow me to find the resets. Okay, so meaning, what is the reset? Do you remember what the reset is, right? It's a push back up and then it breaks it breaks the previous structure. So if I just go ahead and let's just say if I measure from this wick down to this part here, it's about 383 pips. Right, so if I take 383 and I divide that by 90, that gives me 4.2 times ADR. Okay, so is that possible? Is that a good possibility for a good cycle? Yes, it is. Right, and then we have basically a push up right here. Here's where the EMAs come in. You see how it bounces off the EMAs and then it goes back down? This is your reset. Okay, that's your reset there. That's what you can use for the reset. So for that to work, if that's the reset, then what's the pip count from the top of the reset here all the way to the bottom? So that's about 241. So if you take 241 and divide it by 90, that gives you 2.6 times ADR. So that right there could be a full cycle for you. So now you've taken something that's pretty big and you split it up into 2 cycles. Okay. Now, some of you might ask the question, well, why can't you split it from here to here, right? Some of you might ask that, like, why this one here? Why not this pullback? Well, here's the thing. If we go ahead and we measure from that wick to here, it's 355, right? It's 355. So 355, if we divide that by 90, gives us about 3.9, right? Which is totally fine. if you do that, okay. Now here's the problem though, is if you are going to say that this right here is your reset, okay, that means that you need to go down 3 times ADR, right? And in this case you don't, right? You don't go 3 times ADR, you only go down 143. Okay, so if you do it this way, where you're saying that this could be the reset, you see the problem here. If this is going to be the reset, we need 3 times ADR straight down again. So because this is 144, it doesn't give you a full cycle. That's why you can't use this as your peak formation low. You have to use this. This is the lowest point anyways, as a peak formation low. So this would be your peak formation low here, and then this would be your reset here, right? So that's your peak formation low, and then this ends up being peak formation high and then reset. Okay, so that's how you would split that one up, and then you would obviously you could do that, and then you could put another one from here to here, and that would be like 2.6. This would be like whatever 3.7 or 9, whatever it was, or I'm sorry, 4.1. But that's what that would be. Okay, now if we keep going down, let's just do this part right here real quick. To do this section here, right? Clearly we know there has to be multiple cycles here, right? Because this is a pretty big ass piece, right? I mean, if you count, it's 600 some odd pips. It's pretty big, right? So we know we have to split this, right? The question is, where do we split it? So when I look at this, I'm looking at the obvious points of where we could split it. Where are the big pullbacks that we could possibly use to basically split this up into at least into 2, right? For me, it comes this pullback here, that pullback there, maybe this pullback also. So another question becomes, how many pips is it from here to here, or from here to here, and then from here to here? Does it make sense for you to split it that way, right? So let's go back. Let's start measuring this stuff out. So if we go from the bottom to the top here, it's 176, right? That's not enough for 3 times ADR. We go up to here, we got 301. Okay, that's enough for 3 times ADR. We know that. How about if we go up here? If we go up here, it's 388, right? So here's what I'm thinking. If we split it here and we say, okay, this is one cycle, which it is, because it's over 270, does from here to here, does that give you another cycle? Let's check. So from here to here, it's only 178. So no, it doesn't, right? It doesn't give us a full cycle. So we can't use this. So we would have to go from here to here. That's 386 pips, right? 386 pips. If we take that and we divide it by 90, that gives us 4.2. Okay? That gives us 4.2. All right? So that would be one cycle. So it would be from here to here. That would be one cycle. And so we could go ahead and put the peak formation low here. Copy that over here. Okay? And so now the only thing we have to do is essentially measure out from this to here. And what do we have? We get about 400 or so pips, right? So we take 400, we divide that by 90, and we get what? 4.4. Do you see what I mean? So that right there is your other cycle. So this right here, you can confirm that that definitely is a reset. So you just copy this over, change this to peak formation low, reset, boom, and there you go. And so now you just did that whole cycle there, like that. Okay. So we just filled up that entire cycle right there, just like that. So hopefully that shows you the difference that we're talking about. And so the key element here that I use is the EMAs, right? For the pullbacks, for these pullbacks here that I'm trying to figure out where the resets are, I'm trying to figure out which pullbacks go to the 200 ideally, right? The deeper the pullback, the better, obviously, right? Because you have to remember, to have a peak formation here, right, we need a cross of the 13 and 50 on a 1 hour chart. That's what helps confirm the peak formation. So this cross here helps us confirm that, right? That cross. But then you see how it comes down to the 200, bounces off the 200, and then it goes off. Here's one thing that you're going to notice, and we're going to talk about this in more detail when we get to talk about the resets. But if you notice that all of the resets here are bouncing off of what? All the resets that we have, if we keep going, they're bouncing off of an EMA. You see that? Look. They all bounce off of an EMA. Right? The ideal scenario, you see this? Look. The ideal scenario is to bounce off of an EMA. Okay, so the pullbacks that we see that we can get and find, the ones that we want are the ones that bounce off of an EMA. Either the 200 or the 50. Ideally, it's the 200, but sometimes you're not going to get a pullback that deep and it pulls back to the 50. Okay? So that's how you break up that section there. And then obviously you can literally keep going. Right? All the way down. Like, this is a big piece. So now that you know how to break up this, big pieces like this, what's the difference between having, a big 4.1, 4.5 and splitting that up into two cycles that are like 2.5 a piece? You know what I mean? Because there's several different parts, different sections where I saw in the homework where some of you guys were splitting it up. Some of you guys were not splitting it up. You were literally putting, 4.5, 4.5, 4.5, right, all the way across, and you weren't splitting up the cycles. You have to remember that as you're going, right, as this is working out here, like this is current price action right now, as this is working out, like you don't know what's going to happen, right? You literally have to wait for price action to start going. So you don't have like the advantage of how you have it here when you see the entire move. So it's easy for you to pick up, what the cycle is and what it isn't, So because of that, you have to literally start to put the pieces together as they're given to you. So every day you're going to get more data and more data and more data, right? And so you're going to take that data and you're going to basically start to make, decisions based on what price action does. So like for right now on this part here, right, this super aggressive move that went up and then it came all the way back down again, right? So in this particular instance now, there's a possibility because of this huge move back down again that this could potentially reset, right? But we don't know that yet until it breaks this low here. Okay? So until that happens, we're still going with this being the peak formation low. All right? So until we get further data, that's how we have to keep it, because we don't know if that's going to reset or not. Now, if we turn on the EMAs, where does it go to? Look, went to the 200, right? Went to the 200. So there is a possibility that this could reset. But in order for us to confirm that, of course, it has to break this low here. If it doesn't break the low, then it's not a reset. Okay? So look at, for example, this big piece here that we have. It's 3.8 times ADR, if I'm not mistaken. Let me double check this because this is a different ADR right here. So this is 79, the ADR is. So a full cycle is about 237 pips or so. Right? 237 pips. So if we turn on the EMAs and we start counting from here all the way over to here, you could see it's 290, right? It's 290. When you divide that by 79, it's actually about 3.6. So there's no way to split that. That's good, right? If you get to this one here and you're going from top to bottom, it's 300, right? So that we know that's good for sure. That's 3.8 actually. So whenever you get to big sections that are really big, like 4.5, make sure that you're actually measuring it correctly as well, because I found a lot of them that just had the wrong measurement. So make sure that you're measuring from the very top of the wick to the very bottom of the wick. Okay, make sure that you're measuring it that way. All right, so in this example here, actually, if you look at this one, this is from the top to the very bottom here is 380, right? Now before I even measured this out, in my mind I was thinking that the possible reset could be here, and this is the peak low, and then a reset would be here, because looking at it, it looks like a pretty big piece of movement, right? But when you actually measure out, right, it's not that big. You can get it into one cycle. Okay, so very important that you measure it so you know exactly, hey, am I gonna split this, or am I gonna keep it together? If you can keep it together, great, go ahead and do so. But know that if you're anywhere over 4.5, you have to split it. And so if it's 4.7, 4.8, 4.9, right, you got to split it. You got to split that into two cycles. And so remember that, yeah, it's not going to give you exactly 3 times ADR, because it's only 4.7, 4.8 altogether, right? One cycle is 2.5, the other one may be 2.6 or something of that nature. Okay? So just keep that in mind, that you may not have, let's say if it's, you may not have enough pip wise to make 2-3 times ADR cycles, right? Perfect 3 times ADR cycles, but you would have enough to make 2 cycles where one is like 2.5 and the other one is 2.6 or whatever. That's perfectly fine. Okay, and also just remember that the pullbacks that you're looking for those resets essentially are going to happen, and they're going to move when you get to the 200 EMA or to the EMAs by themselves. So turn on the EMAs so they can help you find where the resets are. All right, so let's go ahead and talk about the resets and the failed resets. So I think that this is going to be hugely important because I saw the biggest mistakes from all of the different homework are really with the resets. Some either had them mislabeled wrong or just put way too many resets in. Way too many. So when it comes to the resets, what's the difference between the two resets? A failed reset and an actual reset, right? I'm going to show you that on a chart so you know exactly what you're looking for. Can you anticipate a reset happening? Can you anticipate a reset happening? Perhaps. We're going to talk about it. What do failed resets look like? And what are the characteristics of a reset, right? So let's take a look at all these things. If we go back to the charts, let's take a look at actually, let's take a look at this one. Had a lot of resets. So if we take a look at this pound AUD, right? So take a look at the reset there. Okay. Why is it a reset? Why is this a reset? Remember what the purpose of a reset is. The purpose of a reset is for market makers to continue to move in that same direction that they've been going in. Okay? That's the whole purpose of a reset, right? So we have the cycle. We have the market maker cycle, right? This, like that, right? But this cycle is not enough for them to make the move that they want to make. Remember, because the moves that the market makers are trying to make are already predetermined. Okay, so this move from here to here was already predetermined. The question is, how are they going to get there? That's the real question, right? And so we know that to make this kind of move, clearly it's going to be more than one cycle, right? So that's why you have a reset in the middle, right? So the reset comes here where they're gathering more traders. Some traders think because of this being broken that we're going to go ahead and continue and start a new uptrend, when in fact market makers do this, they break that, and then now we're on for a new cycle like this, right? And so that's literally what happened here. Is we have the full cycle. We have the full cycle here from here to here. 3 times ADR. We go up for one, consolidate. This time we hit the 50, and then we drop for another full cycle. We come down, and then now we can reverse. Right, so the entire purpose of the reset itself is to continue that move in that same direction that they were going in the whole time. Okay, so now what's the purpose of a failed reset? What's the purpose of a failed reset? So the failed reset, okay, comes into play when market makers are done with the cycle, okay, so in this case here, they're done with this cycle here, okay, and they want to go ahead and go back up, right? The problem is that when they move back up here and they're consolidating here, wanting to go higher, they realize that they don't have the numbers or orders that they need to make this move. They don't have the orders they need to make that move. Okay, they need more orders in order to make that move. Remember that this move here, that move is only possible because market makers are holding the orders until the very end, right? So meaning that when you're selling this downtrend, okay, market makers are selling that to you, but they're also buying the other side of the order, right? And so they're buying the other side of the order and they're just holding all of the buy orders. They're not doing anything with them. They're just holding them. Okay? As soon as market makers get down to where their original target was, then they can go ahead and start releasing the buy orders, which essentially is what creates this. Okay? In this case here for the failed reset is what creates this right here. So they start to release the orders and they realize they don't have enough orders to keep going in their intended direction. So what do they need to do? They need to convince more traders to sell. So what do? They come back down, right? So now it basically looks like this. All this looks like is a retracement, and most retail traders, where do they tell most retail traders to sell on a downtrend, right? They tell them to sell on the retracement and tell them to sell here. So they get traders to sell, and they're thinking that this is what's going to happen. It's just a continuation of the downtrend. But they don't realize is all they're doing is that they're giving market makers the orders that they need to make this move up, to change the trend. Okay? So all a failed reset is this. You have your market maker cycle, right? There's your cycle. Market makers go up, they're going sideways, right? You expect them to do this. They can't do that though because they don't have enough orders. So they do this instead. They go back and they tag this down here, right? They tag this down here. Now when they go down here, remember that below this are a bunch of orders as well from breakout traders that have sell stop orders all down here ready to sell because they're breakout traders, right? So they have sell orders all down here. So what do? They come down, they grab the orders, and then they reverse. Remember that they can see all the orders that are down there. So they know whether they have enough orders down there to get them to where their goal is. Okay? So if they see that they have the orders that they need down here, guess what? They're going to come down here and get those orders. And this is where, when you look at the charts, this specific part right here basically looks like this. It looks like a big, it looks like this. Right? That's what the candle looks like. right? Looks like that. And all this is all a liquidity grab. They're grabbing liquidity. That's this right here is down here. Okay, they go down, grab as much as they can, and then they come back up. And then they're gone after that. Right? So that's all a failed reset is. Okay, the reset failed because it failed to take out the low. It's a failed reset because it didn't break the low here. This low was never broken. So that's what causes this to be a failed reset, because they attempted what looked like to be a reset, but they failed because it didn't break the low. It reversed. So what you're going to notice, here's another failed reset here as well. See, they come down. This is not a full cycle, obviously, because from here to here is 3 times ADR. This is only halfway down. They realize halfway down, man, we don't have enough orders. So let's go ahead and convince more traders that this is going to do this instead. That it's going to do that. Right? Let's convince them that it's going to do that. And then all they need to do is go up here, right, to structure, right, where all the rest of the orders are. In this case, it would be a bunch of buy orders here, buy stop orders. Grab the orders, and then boom, now they can do the move. Okay. So those are the characteristics of the failed reset. That's what it looks like. You can keep seeing that these resets here, they go down where? To the 200, to the 200. This one happens to go down to the 800 because that's where, the 200 is running through price right now, right there. You see that? But that's what happens. That's how they do it. Now, can you anticipate a reset? Can you anticipate a reset? So, a few things to note about trying to anticipate a reset. The biggest problem with trying to anticipate a reset is the fact that you just don't know the numbers, right? You don't know what the market makers' goals are, where they're trying to get to. What you have is their behavior. That's the biggest clue, is their behavior. Okay, so what are some of the behaviors that I've noticed? Well, one of them I've just been showing it to you, where is price action goes to either the 200 or the 50 to reset over and over and over and over again. I can't say it enough, because look, on the reset, where did it go to? 200. Reset, where did it go to? The 200. It just keeps doing this. Look, reset 200 over, and it just does it, right? So that right there is clue number one. So if you're ever at a peak formation, right, at a peak formation low that was just created, and you notice that you get a sharp move down that literally bounces off an EMA, especially a 200 EMA, kind of like what we actually have right now on this, right? This, you could start to possibly anticipate a reset, right? So meaning, like, if you were to go down to a 15-minute chart, and during this behavior here, you end up getting like a sell setup, you know that that's a probability that helps confirm that a reset is going to end up happening. Now you can't confirm it until it breaks this low, right? But even though if you're still waiting for it to break the low, you have to remember that you're still going to have plenty of room still to go to. Because if this is 79 pips, you got about 237 pips cycle at least. You're going to have right here 237 if that ends up being a reset. So essentially 135, right? And so where does that go though if you start to look for structure to the left? There's not really any structure there at 135. You see, we're wide open space here, right? So is the likelihood that that price action would go all the way down here out of randomness to down to 35? You know, down here to 35? There's no real structure down here. The structure is up here, right? Because we know that because we're getting essentially rejection, right? Here, 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 right? We see the rejection that we're getting. So for me, a likelihood of a reset happening here, to me it's not very likely. Now if it would be a different scenario if you had rejection right at that 3500 on, you know, to the left here, but you really don't. If you had structure here, then you could say, okay, well, price action could go there, you know, but it can't because there's nothing there to go to. So the characteristics of a reset, we know that they like to go to the 200 EMA, right? Also, they like to make sharp moves, right? So like a really sharp move and then a sharp move back down again. You see this constantly, look, sharp move, sharp move. Okay? So these are the price action structure moves that you're looking for to help you. Now, keep in mind that you're not going to be perfect at trying to detect a reset that's possibly happening. So do not get discouraged, okay, because you're not able to predict resets. It's not your job to predict resets. It's your job to find the setups that are going in the correct directional bias. Okay? There are going to be times when you take a trade and let's say you're coming off of a peak formation low and you take a buy trade and you run into this situation here where this ended up being a reset and you know it gets you get taken out basically. Like, that's going to happen, and that's okay. That's completely okay as long as you follow your plan, as long as you follow your trading plan that we're going to work on throughout the 12-week course. As long as you follow your rules, as long as you follow the system, you're going to be fine. Okay? What you don't want to do is you don't want to make the mistake of literally trying to be a magician and predict stuff. It's not your job to predict anything. It's your job to identify the market maker patterns and the market maker behavior. That's your job. You're not here to guess. You're here to literally just identify the market maker behavior. And I'm showing you the market maker behavior over and over and over again. And so when we do back testing, right? You're going to get to know the behavior. You're getting to know the behavior now as you're going through this course, right? You're going to get to know the behavior. So another thing that I found to be able to try and predict the resets is trying to use the higher time frame structure. Meaning, if you go to the daily, the daily can tell you a lot. Okay? We're going to get into the daily here in a couple weeks. And we're going to talk about structure. And I think this, if anything, would help you the most in trying to identify when resets are prone to happen. Okay? Because if you see on the daily chart, all right, so if we go to the daily, this is the candle that produced the reset. Okay? Now, if you're looking at this on the daily, here's what I look at when I'm looking at this on the daily. Where is the closest structure? Meaning, where is the closest liquidity area where price action is likely to go? Where is liquidity at? If you can answer where liquidity is at on the daily chart, this will help you determine how far price has to go in order for you to predict resets, or try to at least, or get a better idea. So in this case here, if this candle here was where the reset happened, you have to ask yourself, where, even if we go back one more candle, one more day, where is liquidity at? And you may not know this, which is perfectly fine, by the way, because we're going to talk about this in the later videos. But I just want you to realize the liquidity here is down here. There's nothing here at all. It's just wide open space. So why would price action just magically turn around here? That doesn't make sense. Price likes to go to where other liquidity is, or structure, or support, or resistance, whatever you want to call it. It's all the same. Okay? So where's the likelihood of price action going? Well, it's more likely to go here because that's the closest structure that you have. That's the closest rejection that you have on the daily. Right? And so where does price go? Price ends up going literally to that spot. Right? Literally ends up going to that spot. What happens? Look, it just rejects. Right? So if you're in the middle like this, and you get to a point where you're coming off a peak formation high, you get to a point where you're like, man, it's already a peak formation. It has to reverse at some point, right? You can't keep going down past it. So it reverses, but you know that there's nothing here. There's no real reason for it to just stop here and reverse and give you another full cycle going back up again. It doesn't make sense for it to just stop here in the middle of nowhere, you know? I look at these areas here, right, as areas. I look at them as like, I think of them like train stations, you know? And you got to ask yourself, why would a train just stop in the middle of nowhere? Passengers aren't going to get out in the middle of nowhere. They're going to get out at a train station, at their stop, right? Well, where's likely the stop going to be from the most recent price action? That's going to be here. You know? And that's where price went to. Okay? Again, we're going to get into that in later videos. I don't want you to get too lost in it, but I just want you to see of an example using the daily time frame that you can see where price is likely to go And so because price is more likely to go here, it's going to cause a reset to happen. All right, so let's talk about homework. So what we're going to do for homework is we're going to stick to the 3 pairs: AUD CAD, Pound Swiss, and NZD JPY. And again, we're going to find the market maker cycles and resets. I want you to start from current price action. So from today's date, right? From current price action, where price action is right now. And then I want you to go back and do until January 3rd, 2021. So basically from the start of the year until where current price action is. But start from where current price action is now, so that way you can start with the ADR that's currently on there. And then you can work your way back. Okay? Obviously, same thing. Label the peak formation highs, lows, resets, and failed resets. Okay? I need you guys to understand how important the market maker cycles are. I can't stress it enough because it's the entire advantage of the entire strategy. Okay, it's like the base of the strategy is that. So if you can't get this right, you're going to have a horrible time trading the strategy itself. Okay, a couple things. So make sure that whenever you're taking the picture, that when you end up taking the picture, make sure that everything is actually readable, meaning that like it's not all scrunched in on top of each other. So like all the writing and stuff is not on top of each other. Make sure you spread it out nicely like this, to where it's easy to follow. Okay. Another thing is, I noticed that some of you guys were having problems with pasting the links to the email. And so when you go up here to the camera and you click on copy link to the chart image and you click it, you'll see the little icon here that pops up that said it copied the image to your clipboard. So from here, you literally just go to the email and paste it. You don't need to go to the clipboard or anything like that to find the actual link. So you know how on your computer, if you have like like Windows computer, it's like Windows key copy, Windows key C to copy, and then Windows key V to paste, or whatever the key is. All you need to do is literally just either right click and paste onto the email, or use the command to do it. But you don't need to go searching to the clipboard to go find it. Like it's already, the system itself is already in the system. You just need to literally right click and paste. Okay, so hopefully that'll help you out in getting the actual links on the email. Same thing, just send me the links. That's all I care about. Okay. Just like you did in week 1. All right. So I hope that you got a lot out of this week's video. And I hope that this week's homework should be way more improved. And you should see these a lot easier. All right, guys. So I hope you enjoyed the video, and we'll see you for week 3.